What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Let's get ready to rally. At least that's what we wanted to do, and now all of a sudden earnings is reporting with both Apple and Amazon after hours, and what do we got going on there? Amazon, way outside of its expected move for earnings. It was about $185, came way outside of it. We're starting to move back in. Hey, perhaps we come into that range come tomorrow. And then Apple reported earnings, Intel reporting earnings. We had a bunch of other earnings. I'm just going to show Apple as the last one here, and you can see Apple came up right out of the gate to the upper edge of its expected move, almost tagging it, but it said nope, not right there, and came all the way down and tagged its lower edge. Now we're trading right around this range right here. It looks like I'm drawing a stick figure. Okay, so it looks like we're down in the after-hours session, and this is on some good earnings report, which to me tells me that it could very well be another volatile trading session tomorrow. Even though that today it was quite volatile, it was quite beneficial for the stock market bulls. We started the day with a minus 1.3% swing to the downside, but we swung up 3%. This is one of the reasons why I say, don't really short into the hole. A lot of our indicators and signal charts were telling us, hey, a stock market rally can very well happen right here, and that's why I've been kind of just hammering on that for the last 2 or 3 videos. Semiconductors is one of those things that we talked about. It was up almost 6% in a single day. If we take a look at the 11 sectors that make up the S&P 500, everything green across the board. You have the risk off type stuff more towards the bottom of the list, so utilities. This is still one that I'm really watching. Consumer staples, both sectors that I find are going to be incredibly important this quarter. What bounced quite a bit? Well, communication services, technology, energy, consumer discretionary. When you have XLY and XLK up here in the top of the list, yeah, the market's going to do well, and especially if financials was up further up that list too as well, the markets would have probably done significantly even better. But green across the board here. Now, I want to hop into these top 4 sectors just to give you an idea of, okay, yeah, we're seeing a big bounce. Should you be shocked at this bounce? Well, you tell me. Okay, so first and foremost, communication services. Just yesterday, right, we cracked down 64, so weak stocks have been getting weaker, right? It's trending lower. Look where it tagged. It tagged its weekly expected move. So all we're doing is seeing probably short covering rally. Can it go up higher? Yeah, I'd say 64 to potentially even 66 is still an area of resistance up ahead. So it's going to suck in some more people, but that doesn't mean all of a sudden the trend is bullish. The trend is still bearish. So be very mindful of that going forward. XLK did not tag its lower risk range, but it got close. But I wanted to point out here, it was up 4% in a single trading day. Very powerful move. And we are not too far from the upper risk range. So the upside coming into tomorrow could be very well somewhat limited, given especially that how earnings is taking place right now. Could see this thing back off a little bit, but we will see coming into tomorrow. We're going to know more pre-market and coming into market open. And then energy also, right? We came down to the lower risk range. We're starting to bounce from those levels in the 50-day moving average, right? This was a pretty big technical break here, and now we're starting to see it recover. I'm giving energy a little bit more time to consolidate because it has been pretty volatile. And makes sense. If you look at a chart of oil, it looks like it's about to explode to the upside. So if that's the case, I'll be even diving deeper into energy names. But as it stands right now, we've really just been kind of trending sideways and seen some volatile action. I like to see that tighten up before getting aggressive back with energy stocks. And then consumer discretionary, right? Another big sector, XLY. Look where it tagged today, intraday perfectly. Bam, the lower risk range. So what did we see happen? Well, we saw some short covering. We saw a rally also with here. But where are we? Well, we're still in a downtrend below all the key moving averages, and we're going sideways. So can this bounce up? Yes, absolutely it can bounce up, but just understand the greater picture here, what is taking place. That's why we've been talking about, obviously, these bounces to come. Now, let's take a look at the S&P 500, the SPY. We did hit this lower risk range, but it came in the after-hours session a couple of days ago. We talked about the possibility of a big bullish candle taking place here. We talked about, this little reversal type candle, and now we're creating that morning star type pattern, which tells me that there is potential, obviously, to go up, right? Let's get ready to rally. Now, the only thing that's going to hold us from really kind of trying to move up higher could very well be these big earners right here, Amazon and Apple, which could postpone the potential rally. But just understand that a lot of the indicators, they are still overextended to the downside, allowing us to see the possibility for a stronger rally to come from this. But just be mindful. still look at the trend, pay attention to it. If we look at the 15-minute time frame to zoom in a little bit closer, we got above that 5-day moving average, right? It's starting to, the longer we stay above it, it flattens out, right? Doodles around, maybe rips up higher, right? The better. All we need to do is see this start to go to neutral, right? It goes bearish trend, right? Which we're seeing here. Then we want to flatten it out. It goes to neutral trend, which could have been right here, right? But it takes a little bit more time to build out the 5-day moving average. And then we want to see it move into a bullish trend by going up. And then that gives us a little bit more confidence. You can look at the PMO and look at the RSI. They're both coming off a little bit of an overextended area. This one's curling over. RSI got a little overextended. It was a huge rally. Now we're starting to back off a little bit, okay? So strong move. I think that there still could be gas in the tank. It's just these earnings plays that are going to throw things around. It's a very similar situation with the Qs. Qs still has, plenty of room to run up to the upper risk range for the week. Only one trading day left, so we'll see how that goes. But we are positive now week to date for both the SPY and the Qs. So, if we stay around these levels, you're going to notice the weekly candles are going to look somewhat bullish. They're going to look like hammer candles. A hammer candle looks like kind of like this one where, typically from a move down, you can see some sort of a bounce. So that is something that I'll be paying attention to too. If you take a look at the Qs on the 15-minute time frame, we did break out of that wedge, back above that 5-day moving average. Positive development there, right? We come back, maybe back test it, start to head higher, see if that plays out. If that's the case, we might be building out a inverse head and shoulder, trying that again to potentially move higher up around to that 340 level. Something to keep an eye on. And the last thing I want to touch on is IWM. Take a look here. IWM tagged its lower risk range perfectly. So if you're watching these levels, guess what? It gave you a good indication to get out of your shorts or cover your shorts or start to look for potential long positions as we've already been overextended. Well, it came all the way down and it rallied up from 185 to just over 190. That's plus $5 per share there. So pretty large move. Overall, trend still remains bearish. So, you can get excited, right? Like, you never know. The market might go like this. Boom, David Hunter style, right? And melt right up. And it's okay to not catch the exact bottom. I mean, it's going to, just like the last, market rally, it ran up, it came down and so forth. We'll check to see if we get some follow through days, right? It's still very early here. But yeah, even a bounce to 200, even a bounce to 210, does it do anything? No, it doesn't do anything. It just puts us up to previous support and previous resistance. Obviously, that's a very large move, so you don't want to be shorting right there, right? And then holding it all the way up to there. So you got to just be patient, obviously, given the context of all of these charts. And then we got the 15-minute time frame. 15-minute time frame did break out of this wedge right there at that 5-day moving average, kind of got stalled up. It's still declining, so context still bearish here. I will say that, yeah, break to 196 could seem possible here in the near future. As you can see, there's a volume shelf profile here. Sometimes that acts as a magnet. And we had support, and we haven't really had a back test of that support. So perhaps if we get some sort of a back test here and see if it holds as resistance, if that's the case, then guess what? We can potentially start heading lower from that point, but we will see what the 5-day moving average starts to do, right? It's been declining. Maybe it's going to flatten out, go to neutral trend, and then we can go to a bullish trend. All right, that's all I got for you on today's episode, everybody. I wanted to keep it quick and to the point. Hope that helps out. We're going to have more in detail video coming out tomorrow. See y'all later.